Good morning, everyone. Today is Friday, and St. Patrick's Day is going to be on Sunday, I believe. Does that means that somebody's going to pinch somebody in the rear end? That's what we're doing with ISRG, and we made a ton of money yesterday. And we have been focusing this since $576. We hit the low today of 461, traded down from yesterday's big drop. We continued it. We traded it many times off of the bottoms yesterday during that volatility phase. And this is part two of the second day big short selling drop. 27.35 handles down right here in the app. This is the MMT. It's a 13-minute chart with the MMTs. And those put options that Mr. Flag, the $570 puts that Mr. Flag had discovered after last earnings quarter, they had jacked this ISRG. But these put options, the 570s before it fell, they were very, very cheap down here at $20 a contract. Then we had that great big move, and here's where they're at now. There's no volume today, but they're 104 by $108 a contract. So they've gone from, and here's what our alert service will do for you and people like Mr. Flag, who's in our MMT program for several years, spotted this, and we had a plan on it after the earnings last quarter that this thing was going to come down. The low of the contracts, back when he was bringing it to my attention, and this isn't even that long ago, that was on 2/19 of 2013 at $20 a contract. If you'd have bought one contract, it would have been $2,000. Right now, those very contracts are worth $108. That means their value, if someone has to buy the asset, that's $10,800 in value. That's $8,000 value and profit on only one single contract. And this was going out and being conservative because he wanted to go, at that time, he wanted to go out a couple of months on the strike prices. Just to give you an idea, on the weekly ones that we had people trading back at that time, is I'll just show you here right now that 570 put, and that's when ISRG was up at the highs, the March one of the 570 puts. Here's the put chart right here. And on the March contract, no one really bought those up there, but the 560s were bought, which was below the floor, and this is a weekly one now. Okay? And they trade differently than that longer term monthly one. Is a much better trade at $20. These were, to get in these here, you would have to pay, let's say $52, and they're only as high. Right now they're $94, but let's just throw them in the level 2 here. And this is a 560 put. 92 by 9680. It's not as good as the calendar 421 that Mr. Flag had identified up at the highs when ISRG, here's the daily ISRG chart. And when they did their last earnings quarter, they gapped it and ran it to this top. And we knew that that was the top. And that's where he had discovered it through his training. And his analysis was where these tops were. And these tops started getting lower. But this is this big daily down bar, $84 that we did. So let's blow this up. And this is why those put contracts for the longer term, way up here at the 470 strike. I mean, not the 470 strike, the 570 strike. Right here. And this is the chart on ISRG, and it's in a daily sell signal now. And here's that big down day, $84. They popped it right back up on the opening bell in volatility on the daily. Then they sold it right back down. Then we had that 520 area yesterday where we had that major breakdown, and we sold down $32 yesterday. And then right now you can see we're down another $27.35 to 465. And those monthly 420 puts up there at the high of the equity here are now at $104.60 by 108. That is the truth. That is the truth. ISRG, like I said on this daily chart, here's our short term 13-minute chart in our market maker platform. This is what we go by, and we traded off the bottoms. But after today's big selling, you don't have that big of volatility to trade off the bottom. Yesterday, we had a huge move off the bottom. We came right here, we bought those. You can see they moved that sucker right up there and dropped it like a rock on that 13-minute bar. Yes, they did. They ran it off the bottom. Uh, Yesterday's low on this bar was 485, and they ran it right up here to the high, and we did that at 497. That brought the $500 put for today's monthly expiration right back into play. Yes, it did. And yes, it's a 13-minute chart here. Yes, it is. The daily chart is where the identity was, and it was a long-term short. And there are problems in this company right now, and we knew it for a long time. But volatility is volatility, but profits are profits, and identity is identity, and trade management and reversal management and entry and exit management. Right now, when it falls, you pay a lot of, you're making just all kinds of money. You're making all kinds of money. And the truth is here, it's now. And it's all the more reason for you to get with who? Who do you really need to get with to get this? Why do you want our market maker join our SMF stock exchange? We own our own pricings in these exchanges here. Our prices are different than retail. Click on the SMF options exchange pit. Get involved. Get involved. Now's the time. Open an account. Let us give you some money to trade with. We will give you the market maker entry and alerts. Get involved. Someone's willing to put up behind you and train you. Don't ignore it. A lot of us do. When good things come around, a lot of us don't know how to accept it. But that's the down move, 27.35 intraday. That's the conclusion. And that is a great, great short with part two of the second day of the continuing selling to 461 as of 10:33 a.m. Pacific Standard Time, 3/15 of 2013.